Hello class, I welcome you all to this session. This session we are going to discuss the branches of accounting. So there are basically three branches of accounting. One is the financial accounting. The second one is cost accounting. The third one is management accounting. Now we are learning only the financial accounting. So there are other accounting called as cost accounting and management accounting that you will be learning in your higher education. So financial accounting is basically the branch of accounting which records financial transactions. So it records financial transaction. Okay. So cost accounting records the elements of cost. It is primarily used to find cost of a product, process or services. Okay, so it is primarily used to find the cost of a product, process or services. For example, you are manufacturing a chocolate. Okay, how do you arrive at chocolate? Say for example, our chocolate cost rupees 50. How do you arrive at this 50? You have the raw material, you have the machinery, process cost, and plus you will have the profits. So how do you arrive at this 50 rupees will be defined by this cost accounting. Now management accounting records those elements which are useful to the management to make effective decisions. Okay, so it records the elements which are useful to the management to make effective decision. Now what elements, how does it records the elements? It is from the financial accounts as well as from the cost accounts. Okay, so financial accounting records the financial statement. Now what is the basic objective? What is the basic objective of preparing this financial accounting? The basic objective is to prepare, to know the financial performance, whether the profit has whether the concern has made profit or loss, financial performance, and to know the financial position, that is by preparing the balance sheet. Okay, it knows the financial position. Now what is the objective of preparing cost accounting? The objective of preparing cost accounting is to know what is the cost and identify various ways to reduce cost, okay, and control cost so that profits can be increased. Okay. Now, management accounts is the main objective of is to help management to arrive at effective management decisions. For taking effective management decision, you may require some important uh, data or information. Based on this information, you will be able to make some fruitful management decision which will ultimately help in the profit of the organization. So this is an important question. Branches of accounting. What are the branches and what are the various how do we differentiate from financial accounting, cost accounting and management accounting? Financial accounting is to record only the financial transactions. It is the base. So we have the base. We are going to learn this. So bookkeeping, it has 3 stages: bookkeeping, accounting. Okay. Now the next thing that you are going to learn is what is bookkeeping, what is accounting and what is accountancy. Now can you see this diagram? It's like one spiral thing, no? So bookkeeping is in the center, accounting is little broader than bookkeeping, and accountancy is even broader than accounting. So we can say that accountancy kulla there is accounting kulla there is bookkeeping. Okay, now what is bookkeeping? I wanted to show you one thing. Can you see this textbook? What it is written? Double entry bookkeeping, financial accounting. Okay, so double entry bookkeeping. So what is bookkeeping? Whatever we are learning right now is only bookkeeping. Okay, so bookkeeping is basically the way you identify, measure, record and classifying the transaction. So we are talking about IMR as well as classification. So recording in terms of journal and classifying in terms of ledger. So we are talking about all these things. Up to this, it is called as what? Bookkeeping. You have a separate book of journal. You have a separate books for ledger, like that. Okay. Accounting means we are talking about those aspects which are related with the knowledge, application, of accountancy. Accountancy is the knowledge. You are applying this knowledge to arrive at the financial statements. Okay, that is called as accounting. So knowledge application of accountancy gives you a knowledge, and how do you actually apply that knowledge is called as accounting. Okay, so these are the basic terms of bookkeeping, accounting and accountancy. Now, who are the users of accounting information? Who are the users? There are 2 classes of users. One is the internal user, the other one is the external user. Okay, who uses this accounting information? That is the financial statements, your ledger. Who uses this? There are some internal users. Who are the internal users? We have the owners. Owners ultimately take the risk. So obviously they will be very interested to know the result. So they take risk. So obviously they want to know whether their business is doing well or not. Okay. The second person is the management. The management needs accounting information to take decisions. Okay, so management requires useful information to take decisions of the concern with related to the selling price, with related to the cost, with related to investment. So basically they are into decision making. Okay, the third person is employee and workers. So employees and workers are interested to know how the organization is doing, because they have to get salaries. Employees have to get salaries, workers need to get wages. So it is out of the profits. It's a charge against the profit. So out of this they have to get this. So they will be interested whether the company is doing good or not. Okay, now this is internal users. Now who are all the external users? The external users can be the banks and financial institutions. The second person can be investors and the potential investors. Okay, the third person can be creditors. The fourth person can be government and its authorities. The fifth person can be researchers. Sixth person, consumers. The seventh person can be the general public. Now, banks and financial institutions will be the persons who are giving loans to the organization. So obviously if you are giving loans, you should be well versed. We should be well knowing that whether this particular organization will repay the loan or not. Okay, so we have to judge their credibility. Okay, so credibility means whether they will be able to repay the loan or not. The second person is investors and potential investors. The person who wants to invest, they want to become the owners or they want to invest in the business, then they will be interested to know. They will not invest in a business which is doing bad. Am I right? So they will be investing only in the business which is doing good. So that investors, that is very important. So external users can be the investors. Say for example, if the business is doing really good, it has a lot of profits, obviously the investors will be interested. The third one is the creditors. The creditors are the person who is actually supplying to the organization. We have purchased from them on credit. So they will be interested to know whether this person will make payment to me or not. Okay. Then the fourth one may be the government and authority. See, government usually prepares massive information like GDP, and they want to calculate the income of the nation or something. So they will be interested to know the income of the various financial houses of business houses of the country. So they will be interested. And also for tax purpose, tax authorities will be interested to know the financial position of any business, so that tax can be collected properly, and there will be easy compliance, and they may come to know that certain business are doing well. So obviously it will be helpful for them to make suitable policies to aid business. Okay, the fifth one is the researchers, those who are doing their PhDs, and those who are working under research firms, who are analysts basically. So they analyze this financial statement. They find their findings will be useful for future study purpose. So it's like for researchers. The sixth person is the consumers, the persons who are consuming the goods of a particular company, or consuming the service of a particular company. They are interested to know whether they are paying right price for the goods, whether they are getting from good company, good quality, it depends. No, the quality of the company will depend, quality of the company. Then you have the general public may be interested to know how business is going on, how the business is contributing to the economy. And students may also be in the external users thing. So I will include students. Okay, students can also be under a part of, we are coming under general public only. So these informations are they are called as the users of the accounting information. This may be asked in some theory questions in your exam. Okay, so this part is important. Make sure that you know what it is. Okay, it's a very important question. So now we are going to look into the systems of accounting. We have the double entry system as well as the single entry system. Every transaction under double entry system, you all know that every debit has an equivalent credit and every credit has an equivalent debit. So every transaction has two aspects basically. One is the debit aspect, another one is the credit aspect. Debit is short called as DR and credit in short is called as CR. Okay, so all accounts are accounted here. That is, your personal account, your real account, your nominal account is maintained. Okay, and double entry system is a scientific, what it is a scientific and complete system of accounting. We will look into this. There is one more system of accounting called as single entry system, which is not that popular as double entry system, because double entry system is superior because it is used in all the accounting. That is, if you want to account correctly, you need to use this double entry system. But there are people who do not know this double entry system, who do not have the knowledge to prepare double entry system. So they will use the single entry system. Say for example, a small business person who uses a single entry system. So it is called as incomplete double entry system. Obviously, he maintains only the personal account as well as the cash book. So he maintains only two accounts. So debit does not have, every debit does not have a equivalent credit and every credit does not have a equivalent debit. So I will just quickly run through the advantages of double entry system. It is a scientific system. It completes complete record of transaction. It has a complete record of transactions. There is an arithmetic accuracy of accounts is ensured, determining the profits and losses. The knowledge of financial position is known and provides the significant information for the purpose of control, and comparative study is possible, helps management in decision making, detection of frauds and misappropriations. Now you will not understand anything. See, what you just write it and keep. Okay, when we are doing problems, I will tell you at the last, we will be referring the advantages of double entry system, so that you will be able to understand this. But anyways, I just completed this part, so make sure that you write it and keep. I will see you in the next class. Okay, so keep writing whatever is the notes that's been given. It will be useful for you in the future. Thank you, class.